Hello everyone and welcome to my monthly vlog. I hope you are having a good February so far. This is your final reminder that the tax year end is approaching and it's now time to maximise all the tax allowances you have. The ISA allowance for this year is £20,000 and there are various types of ISAs available, with the main two of course being cash, better for short-term savings, or stocks and shares for longer-term growth. Don't forget, if you're saving for your first property and under 40, it's worth considering the suitability of the lifetime ISA, the LISA, too. You can read more about this on our website in our blog where we've written various articles. There is also, of course, the junior ISA, the JISA allowance for children under 18. The current JISA allowance is £9,000 per annum and the JISA savings will become available to them at age 18. Any unused ISA allowances can't be carried forward to future tax years, so it's a use it or lose it situation, people. As a reminder about pensions, personal pension contributions benefit from basic rate tax relief at 20%, meaning for every 80p you pay in, the value is topped up to £1 by the government. For higher and additional rate taxpayers, the benefits can be even higher, with further tax relief claimable via your self-assessment tax return. So make sure those pension contributions are done ASAP before the 5th of April. Pension contributions, of course, are generally capped by the annual allowance, which is £60,000 this tax year. That's increased on last year. Your individual circumstances can have a significant impact, however, on the maximum amount that you can pay into a personal pension and each tax year. In some cases, you can pay more than £60,000. Up to 100% of your salary if we could utilise carry forward, whereas others might be limited to the reduced annual allowance of £10,000. Listen, making a mistake when contributing to a pension can be costly, so make sure you get in touch if you'd like some assistance with calculating this. There is some changes afoot to capital gains tax rules, and next tax year, the capital gains exemption will reduce from £6,000 to £3,000. And so if you want to utilise this year's higher allowance to flush out any gains in your taxable portfolio, and this hasn't already been actioned, then now is the time to review this. And finally, if your total estate is currently over the inheritance tax IHT threshold and you're keen to mitigate IHT, there are some actions you can take each tax year to mitigate the impact of IHT over the longer term. So each tax year you have an annual gift exemption of £3,000, which each person can give away without any IHT consequences. If you don't use it, it can be carried forward, but only for 1 year. So make sure you think about that. You can also make small IHT exempt gifts of up to £250 to as many people as you wish throughout the year. You can also use the often underutilised rule of regular gifts out of income. So as long as there is an established surplus of income over expenditure and you're not depriving yourself of your required income, then that's allowable as well, and no worries about IHT. Whew, that seemed like quite a lot of technical stuff, but it's important that we just always summarise it every year. Just before I finish, thank you to all those who have already listened, celebrated and commented and contacted me about the launch of the new podcast, Women Talking Money, which I told you about last month in my vlog. So far, the podcast has been a great success and I'm really looking forward to how this progresses as the project develops in the coming months. I'll pop the links to the podcast in the accompanying wording to this vlog. So if you're interested in listening or sharing this with someone who you feel it might be of interest to, you can do this super easily because I'll have made sure I give you the links to do that below. That's all for me this month and see you next month.